This week on the Nigeria Economic Update. Federally collected revenue rises by 5.31% in the fourth quarter of 2024. The Central Bank of Nigeria fourth quarter 2024 economic report shows that federally collected revenue rose by 5.31% to 7.23 trillion naira, but fell short of the government's benchmark by 19.67%. Oil revenue increased by 53.59% to 2 trillion naira in the same quarter due to increased receipts from petroleum profit tax and royalties, yet missed the government's target by 62.19%. Non-oil revenue, which contributed 72.28% of total revenue, exceeded its targets by 41.30%, but declined by 6.03% from the previous quarter, likely due to weak corporate tax collections. Although revenue accruing to the federal government increased, its inability to meet the government's targets threatens the government's ability to fund vital projects for economic development. To make up for the shortfalls in government revenue and to increase the government's financial capacity to fund vital projects in health, education, infrastructure, and all, the government should implement good tax reforms, adopt innovative and effective methods of collecting tax, and strengthen local refinery capacity to maximize the potential from oil revenue. Secondly, Nigeria's stock exchange trading for the first quarter of 2025 closes on a positive note. The Nigeria Stock Exchange Weekly Market Report ended the first quarter of 2025 on a positive note, with the all-share index and market capitalization increasing by 0.66% to 105,660.64 points and 66.256 trillion naira respectively. Industrial goods led trading activity with 4.923 billion shares, valued at 331.9 billion naira, accounting for 65.46% of total equity turnover volume and 83.22% of total turnover equity value, followed by the financial services with 2.029 billion shares, valued at 33.7 billion naira, and the service industry with 198.7 million shares, worth 788.6 million naira. Despite the overall market gain, the oil and gas sector fell by 1.65% for each week in the first quarter of 2025 and 9.34% from the quarter to date, marking the steepest quarterly decline among other indices. To address this underperformance in the oil and gas sector and restore investor confidence, the government must ensure the security of oil infrastructure, invest in modern-day oil technologies, and ensure the stability of the macroeconomy through a melange of monetary and fiscal policies. Lastly, Nigeria's interbank call rates hits 28.58% in January 2025. According to a recent Central Bank of Nigeria statistics, interbank call rates rose sharply from 28.58% in January 2025, up from 16.43% a year earlier. The increase correlates with the rise in the Central Bank of Nigeria's monetary policy rate from 18.75% in January 2024 to 27.50% in January 2025. The rise in MPR has further led to the rise in the rate at which banks lend money to one another, further increasing the rate at which businesses borrow money and slowing down economic activity. Although the Central Bank of Nigeria's monetary policy tightening aims to curb inflation rates by reducing liquidity, Excessively high rates may hinder investment and growth. Therefore, discipline on the part of the government in expending fiscal revenue is needed to manage the volume of money in circulation without increasing the interest rates. Visit our website at www.ccafrica.org to read the full article on the CC Nigeria Economic Update.